All right, so I will go ahead and kick us off just in respect of everybody's time and as people start kind of coming on. So we'll go ahead and get it started. So first of all, thank you everyone for joining us for the webinar. And really just today, hopefully everyone can take advantage of that nice Grubhub voucher. I know that I did already, so feel free to do that. It's 35 bucks, goes a long way. But let me introduce myself. So my name is Megan Elwood. I am the Business Development Manager with Strategies Group. In Strategies Group, we've been providing technology solutions for over 25 years. We are located here in Suwanee. And one thing that really has been consistent during those 25 years for Strategies Group is change. We've changed in operating philosophies, we've changed in capitalization strategies, change in human capital management theories, regulations, and of course, technology. So as everyone's having to see, we're having to do a lot of change in technology and really a lot of business continuity with that. So one of our big things this is kind of said throughout our office, it was said by Edward Deming, the management guru responsible for inspiring the Japanese manufacturing industry's historic rise. And it was believed in this constant so much, he infamously said, it is not necessary to change because survival is not mandatory. So simply put, if you don't change, you become irrelevant. And so I feel like a lot of people are, having and really kind of witnessing that right now. I don't think anyone on the call today believes change is unnecessary. However, many of us struggle with balancing change with the investment in change. So while it is necessary, it is rarely simple and inexpensive. So the goal is to achieve value for your investment in the change, because we only see value when the cost of something is less than the reward that it brings. So overall, the goal is to reduce the cost by increasing your reward. That's really kind of our goal. And so today's technology has the ability to bring great value. Informational accuracy and mobility, presentation of data so that it's easily and quickly understood, integration to the entire business processes are all high value reasons to consider upgrading your system. So while these are extremely important, today we're focusing on the other part of the equation, which is cost. How do you reduce the cost of implementing change so that our potential value is greater? Remember, we defined value as the reward of change minus the cost of that change. So, today's presenters, they're going to give us some really good insight into how our state and local governments encourage change and even willing to help us repay for those investments that are being made, which I think a lot of us are having to think about now. And how many times you've been able to say that about our government, that they're going to repay us for something that we're implementing. And so with that being said, I'm going to keep it short, but I'm going to go ahead and turn it over to Kate Davis with Alpharesults, and she will talk to us about the state of Georgia retraining tax credits. So I'll hand it over to Kate.
Thanks, Megan. Thanks for everybody who joined today. I am going to talk about just one simple Georgia credit out there that most every business in Georgia will qualify for at some point, and very likely in 2020. We have specialized in the Georgia retraining tax credit for almost 20 years. And it's important that you think of this credit less as a training credit and more as a technology credit. This Georgia retraining credit is designed to help you offset costs of new and upgraded software and equipment that you use in your daily business operations. This credit is available to any business operating in Georgia and paying Georgia income taxes, and that's going to include your pass-through entities. The credit will actually pass through to the business owners. So there's a variety of qualifying activities that can be included in this credit. A few examples are listed here. For instance, moving from manual pen and paper type processes to software. Maybe you used to have your employees just sign in timesheets, and now you're using a time software tool. If you switch technology providers, that's a great opportunity for the retraining credit. For instance, you might move from one ERP system over to Acumatica. That's a huge change that we can capture a credit for. If you upgrade an existing software tool that you have to a newer version, or maybe you buy more features, like you add an additional module to that existing tool, then that's going to qualify for the credit as well. And then also, if you're adding more users or seats to an existing program, oftentimes you can collect a credit for that change as well. So let's look at an example of the retraining credit. In this example, a company installs a new enterprise-wide business system, and they train 100 eligible employees. This company can receive up to $125,000 in retraining tax credits that year of the implementation. And we calculate that by taking the 100 eligible employees that did the training times the maximum per employee of $1,250, and that's where you get up to $125,000. So you can see it can be quite lucrative depending on how large your business is and how large the investment is. So let's look at a few different types of qualifying software. Really across the board, every industry likely has something that qualifies, whether it's accounting, finance, billing, payroll systems, maybe you've added a new benefits platform, time management systems, planning and scheduling tools, project management, job costing and estimating for our construction folks, great activities that qualify. Customer relationship management tools, so your CRM programs for your sales force out there, purchase order management, production, warehouse, and inventory management. We're seeing quite a bit of automation procedures being put in place for our manufacturing and distribution folks, and so often those activities are going to qualify as well. Really anything that you're using in your business that's related to software technology, if there's a change, that's going to qualify. So this year especially, we're seeing new remote working technologies across almost every industry that are going to qualify. We expect almost 100% eligibility for the retraining credit among our for-profit entities in Georgia in 2020 due to the required virtual technology investments related to COVID-19. I've listed some examples here on the slide. You can see those include remote conferencing platforms like Zoom and Microsoft Teams that we're using today. Virtual payment processing, we've seen that across various industries. Of course, telemedicine for physicians and dentists, they've had to completely change the way that they're interacting with patients, and technology has become a big part of that. Another example, mobile ordering and apps like Grubhub that we use today for food franchises, that all qualifies for this credit. So let's discuss some of the benefits and how the retraining credit works. And we discussed this part in the example earlier, but the Georgia retraining credit offers up to $1,250 per qualified employee every year. And this credit can be used against 50% of income tax liability in a given year. If you don't happen to use the entire credit, you can carry it forward for up to 10 years. And then you also have the opportunity to go back and amend a prior year return within 12 months of filing to add an applicable credit for last year. As far as eligibility, your eligible employees must be Georgia residents and have worked at least 16 weeks at the company full-time. Allowable costs that we'll look at include developmental costs, vendor costs, instruction costs, and instructor salaries, which will include any consultants that you might involve, your employee salaries and wages, and then material and manual costs and travel costs related to any changes in software and technology that you've had. So in summary, the Georgia retraining credit is a quick and easy way to offset the cost of your business software and equipment. And COVID-19 has likely forced you into a position where you're qualified for it in 2020, and we would love to help. My email address is here. It's kdavis@alpharesults.com. Reach out to me, and in 15 to 20 minutes, I can confirm for you if you've got a qualified opportunity and if it's worth looking into a credit for you to help you reduce your tax burden. And I know we're doing Q&A at the end, so I will turn it over to Megan again. Thanks.
Awesome. Thank you so much, Kate. Yeah, and like I said, as you guys, think of questions that we can go ahead and answer as we're going through the webinar, throw them down in the Q&A. Like I said, and Kate also said, we'll get to them in the end. And also too, I think I said this in the beginning, but we are recording this, so we can also send this out. So as you're thinking of these things, we can help answer those questions. So with that, I will throw it over to Dana Brewer, who is with the Georgia Department of Economic Development, and she will talk about the Research and Development Tax Credit through the state of Georgia. You're on mute. There you go.
You would think doing this every day since, March, I would have remembered that detail. Anyway, thank you, Megan, and thank you everyone for being a part of this. And Kate, thank you for that overview of our retraining tax credit. That was great. I feel like I learned something. I hadn't thought about the fact that I'm sure there are a lot of companies represented on the call or otherwise that are doing training with Zoom or something like it in this year. So that's great. Thank you, Kate. Yes, I'm with the department. I'm the Director of Incentives and Special Research Projects. So I don't know if you've ever worked with one of our project managers, but I'm behind the scenes answering questions about our tax credits. I'm not the final authority. The Department of Revenue is the final authority, but I am happy to share with you some highlights of our R&D tax credit and how it may benefit your companies. Starting with an overview of the benefit of the R&D tax credit, the value can be up to 10% of the QRNE stands for qualifying research expenditures. The way it's designed is it really the greatest benefit typically comes in years in which you're just starting off with R&D activities or years in which you have an increase in R&D activities. And also the way the calculation works, it's the value the more of your sales that are out of state versus in state, the higher the value likely is for you. And I'll talk more about how it's calculated in a few slides. But I wanted to share up front that, those credits that you can earn each year that you qualify can be applied to up to 50% of your remaining income tax liability after you've applied any other credits, whether they be retraining tax credits, as Kate talked about, or our kind of flagship tax credit programs, the job tax credits, or any of the other credits that we have available. And also with the R&D tax credit, it has additional value in that once you've met the obligations to apply it to corporate income tax liability, you can apply it to your payroll withholding. And from an employee point of view, the employees still get, it's still put down as money applied to their individual income tax credits, but the company doesn't have to remit those dollars to the state. The company gets to keep those dollars in their pocket to, reinvest or however may want to make use of that cash value that you earn once you're applying credits to the payroll withholding. And there's no recapture or clawback provisions or reporting requirements. It's just cash in your pocket. So that's why the R&D tax credit and our other credits that can be applied to payroll withholding can be so valuable to companies. And there's also a 10-year carry forward with it if after it's applied to payroll withholding, you still have some remaining credits for that year. Thank you, Selena. Like our job tax credit program, the R&D tax credits are available to the state's strategic industries as defined in the law for these two tax credits, manufacturing distribution centers, like some office-based work like software development and kind of a host of different things. And of course, actual R&D facilities themselves. Thank you, Selena. Yeah, thank you. For the, now what types of expenditures are eligible? Well, you do have to first be eligible for the federal and R&D tax credit. That's kind of a prerequisite. And the activities that qualify are defined by the IRS code for the federal R&D tax credit. The only adjustment for being eligible in Georgia is it's only the expenditures that occur in, oh, I'm sorry, I got distracted by my own second screen. I'm sorry. The only difference is it's only the portion of the tax credits that the activities that occur in Georgia that can be claimed. So if you have facilities in many states and only 10% of your total R&D qualifying expenditures at the federal level occur in Georgia, then only that 10% of that total activity that can be claimed. And it's everything from purchases of materials and supplies to contract work, as well as, sometimes I think it can be overlooked that the salary time of the people involved. Like if there's someone 100% dedicated to R&D activities, then 100% of their salary can be claimed. If their manager spends, let's say, 10% of the manager's time overseeing and be involved in the work, then 10% of their wages and salaries can be part of the eligible expenses. For the activities, sort of like what Kate was saying with the retraining tax credit, it's not just what you think of when you hear of training. Same with this. It's not just what you think of when you think of R&D. It's not just activity that's happening in labs. It could be happening on the manufacturing plant floor, whether it's beyond new product development. It might be, different development and testing of the prototypes and molds and dies necessary for the manufacturing process. Even like the improvements to the assembly line itself. And in the case of distribution centers, process improvements that distribution centers may have as they're, adjusting different ways to move product within the facility and then out the door. As I've heard it described, is that it just needs to be, the activities need to be based on a hard science for those process improvements to qualify. But we hear that manufacturers, distribution centers, and some of those types of activities can have activities they did not realize that could be claimed for the R&D tax credit and can get that value that, again, can reduce that liability and be applied to payroll withholding. And also the fourth bill, thank you, we can move on. The fourth bill was referring to like some of the software-based activities that may be involved in, whether it's testing the software or testing new equipment, that can also be activities eligible. This is an illustration of the calculation. It's basically, as I said, it's the highest potential value is 10% of the in Georgia QRNE. And how does it become less than that 10%? Well, you have to subtract out a base amount from the QRNE, and that base amount, the math is represented on the orange portion of the slide. It's your Georgia gross receipts times a value. And that value is determined by the lesser of 30% or the average over 3 years of the ratio of your Georgia QRE to your Georgia gross receipts. And again, whichever one of those two numbers is less, you multiply it by the gross receipts and get that base amount that you subtract out of your Georgia QRNE to come up with a value that's applied to the 10% to have that actual tax credit value. I know it's easy to get lost in the weeds of that math if this isn't something that you're familiar with, but that's why a good kind of bottom line to think about is it's up to 10%, and that value can be a lot. And again, the way the orange calculation, if you will, works, it's your end value, your actual tax credit value will be likely higher if you have had a big increase in R&D from the prior year, or you're starting R&D activities for the first time. And then it also, in your final value ends up being higher. The fewer, the lower, the less your Georgia gross receipts are. And I think I have one more slide. Yes, thank you. And just wanted to, as my final slide, just again, highlight the ability to apply with payroll withholding that people really value in this R&D tax credit. And it is one of several tax credits that we have that in certain circumstances can be applied to payroll withholding. Our flagship job tax credit just passed this legislative session in response to the pandemic is our new PPE tax credit bonus. And our quality job tax credit, that's for kind of higher value, higher wage jobs can typically get a higher value credit than the job tax credit. So just wanted to just share that there are different credits, additional different credits that we have that companies can benefit from as they're growing new jobs or investing in new equipment and activities. So with that, I'll pass it back to Megan to ask
Yeah.
to hear what your questions may be that Kate or I can help you with.
Yeah, so just a kind of a, I guess, I know sometimes these webinars and a lot of, the overwhelming things and the numbers and all this, it's sometimes you don't know what to ask, which is fine. And, it can be very confusing, I guess, to say the least. But so I guess a question that we did have was, can you, and I guess either of you ladies can answer this, can you take advantage of both the retraining tax credit and the R&D tax credit at the same time? You can? Okay, gotcha.
Yes. In fact, you may have seen both of us talked about how the retraining credit and the R&D credit can be used to offset up to 50% of your income tax liability. So if you have the opportunity to utilize both, then you should ultimately be offsetting 100% of that tax liability.
Okay, and that was my next question.
It's a great combination to use together.
Yeah. Okay, great. And so with R&D tax credit wise, Dana, can you give like an example of what an R&D tax credit, what type of company would benefit from an R&D tax credit? Like just like a high level example of what that would look like.
Yeah, like if there's a manufacturing company that maybe this spring they transitioned from manufacturing one product to something that was like hand sanitizer or PPE to respond to the pandemic and, keep their sales up because maybe their primary product was something in less demand. I imagine they had to run through maybe they tested different materials to see like what type of material would work best for this new product they were doing. They were trying out different things. Maybe they were trying out different ways to set up, even like the assembly line, like maybe they had the assembly line set up for, like t-shirts, and then they were switching over to surgical gowns,
Gotcha.
that might be like kind of readjusting things and through that process, whether again, it has to be based in like a hard science. So maybe it's the physics of how it's going down the assembly line, or maybe it's more chemistry based as they're testing different materials or for like different supplies for hand sanitizer, those types of things that could qualify.
Okay, gotcha. I do know a question we have, and it says, are there any other tax credits that we should be looking out for in terms of technology?
I think that there's the investment tax credit was probably is the one that we have that you earn credit based on a percentage of your investment. To qualify for that, it has to be either a manufacturing facility or a telecommunications facility, and you have to have been in the state for at least 3 years.
Okay.
But if you meet those requirements and have an investment, the minimum required threshold is $100,000, and so that can be something where you earn credits to apply to your corporate income tax. Since I'm talking about it, I will just share. It is one in certain circumstances where it can be applied to payroll withholding. And for that particular tax credit, the circumstances are, it has to be in a county that's defined as a rural county. So it'd be more relevant, generally speaking, outside the Atlanta metro area or any metro area, like the Macons, the Chathams, Richmonds wouldn't be eligible. But if your operation or your sister operation is in a rural county, that might be something to look into if there's been an investment that qualifies.
Gotcha. Okay. I know that we also have another question here. It says that, and I'm not sure, but it says we're a large-scale recycling and renewable fuel company. What category would they fall under?
That is an excellent question, to be honest. That may be because the short answer is it depends. So it may be best if that individual wants to like follow up with me after this call. I can help out like more specific to their operations. But in general, the language we use is you like self-identify what your operation is, and by extension your NAICS, to determine. The NAICS is if you're not familiar, is a classification system of companies by type of industry. And so like in the law, it defines industry by NAICS. So it's, is the NAICS that you self-identify as one of the ones that qualifies. And so for like a recycling renewable company, like we've had some prospects in that field over the years, and it seems sometimes they sound like that they might be able to self-identify as manufacturing, then be eligible. And then sometimes it sounds like they might be a stretch to consider themselves a manufacturer. So it really does depend on, you know, kind of what products coming in and what products going out the door to, you know, identify.
Because doesn't the company like let's say I'm in renewable fuel, don't I determine my NAICS code?
Well,
or does the state do it?
You self-identify, but the truth of the matter is I mean, just to get down to the weeds, if you will, like if you happen to be under audit and the auditor felt like you had misrepresented your NAICS, then you could have a challenge there. You have to demonstrate, if you are under an audit, you would have to demonstrate that you are indeed the NAICS you've identified. You know, if you self-identify as a manufacturer and walk in and everyone's sitting at offices writing emails, you're going to have a problem with your auditor, just to use an extreme example.
Yeah, gotcha. Okay, because I know. Go.
Sorry,
no,
I was
go ahead,
going to say, I could add to that because in addition to processing the Georgia retraining credit, we actually work on all those Georgia credits that Dana listed on her last slide as well. And so we have had a prospect that we worked with in a similar industry with the renewable fuel, recyclable materials, where we were able to get both a Georgia investment credit and R&D. So like Dana said, I think it's definitely worth exploring a little further. We do always verify the NAICS codes, and we've had instances where once we learn a little more about what the company's doing and we say, well, you really could qualify based on these activities and expenditures. So the appropriate NAICS code or an additional NAICS code for you would be this. And then we work with the CPA to actually have that changed for their benefits so that they can take advantage of these credits.
Right. Which makes sense, because I know that we at Strategies Group, I know that we have some clients that use the retraining tax credit to do ongoing training as the new software releases that comes out each year. So I know that they basically plan to have 2 trainings a year, and the costs are almost completely offset. So is that something that you can do? You can keep it ongoing in terms of retraining?
Yes. So specific to the retraining, yes, we have many clients that take advantage of it every single year. We have some that they max out at that $1,250 per employee every single year, just because the nature of their business is such that they have to continue to invest in the latest and greatest technology. And so by doing that, they have a lot of qualifying activities and can get that credit every year.
So have you guys seen more of an uptick in people, I guess, applying for the retraining tax credit just because of the times that we're in? And I think people are now, realizing, when your hands kind of held to the fire, that, you have to have software, implemented, and you have to be able to, have business continuity if things happen. So have y'all seen an uptick in that in terms of retraining tax credits?
We have. I would say this year we've had more interest than ever before. We processed probably 250 retraining credits for 2019, and we've already had a number of conversations with folks that are just trying to learn about it so they know what to start collecting and having set aside for us for 2020. I think it's twofold. One, you've got the virtual technologies that everyone's having to invest in, and just everyone's going more towards a software technical operation in order to survive out there. And then the second side of it is this year's it's been so uncertain in terms of the economy. And so companies are trying to keep every dollar that they can. And so if you can get a credit and send less money in, then that's a win-win.
Yeah. And everyone knows, implementing a new software can be very expensive, and, granted there are flexible, options, but in the end, like you said, you've got to keep your employees and you want to keep them. So you want to save every dollar that you can. And I guess switching over to that, Dana, I do have a question. So are you able to take advantage of multiple state of Georgia tax credits at once? Because I know you have like the new job tax credit, high paying tax credit. Are you able to take advantage of all of those?
Yeah, there's some like, if I don't know how, I'll give you a specific example, like the jobs tax credit and the quality job tax credits. You can use both for the same project, but not for the same person, or the same job, I should say. Like if you have, like if you're creating 100 jobs and 70 of them meet the wage threshold for the quality job tax credits, you can claim the quality job tax credits for those 70 jobs. The balance of the 30 jobs, if they qualify for the job tax credits, you can qualify the job tax credits for those. So yeah, pretty much all our tax credits, you can use all of them for the same project. Actually, as I say that, I should also point out, we don't see as much of the investment tax credit questions. I have to kind of remind myself that that's another one. You can either use the job tax credits or the investment tax credit. You can't use both for the same project.
Gotcha. And what's the main difference between the investment tax credit and the job tax credit?
The main difference is for the job tax credit, the value is based on job creation. You get, there are 4 different tiers, and there's a different credit value based on the tier assignment of the county. And you get that value times the number of jobs times 5, because you're able to claim it for 5 years if you continue to maintain the job. For the investment tax credit, it's a percentage of your investment. It's a different percentage, 4 different percentages based on which tier you are. So it uses the same map, but that value, and I think you apply for that one ahead of time, which is another difference. And then once you get that value, you can use it in that year 1 that you've been approved to use the value based on your investment of your completed project.
Okay, gotcha. I know we do have a question here, and this is obviously very high level, but what is a typical amount a company could receive from these tax credits? Is that kind of based off, what they're bringing to the table, or what is kind of a roundabout number that it would be for R&D and retraining?
Yeah, the retraining is of the tax credits we've been talking about, the retraining is the only one that has a cap. So it's basic, and the investment tax credit does have a cap on how much can be applied to payroll holding. It doesn't have a cap on the value, just how much can be applied to payroll holding. So basically, the value is based on, in the case of the job tax credit, your qualifying jobs times so it's just dependent on the number of jobs you create. Same thing with the R&D, the value is uncapped depending on how much expenditures you have that qualify. So there's not a good way to kind of average it out because of that.
Right.
I will say, Megan, it's pretty easy to, in one conversation, give a company a range of what their credit estimate might be, whether that's the retraining credit that I discussed, the job credit, the R&D credit, investment tax credit. Like I said, we at Alpharesults work on all of these. So I know I just talked about retraining today, but we have conversations with companies all the time, or even their CPAs, to talk about, well, how many jobs did you add? Okay, well, given the county you're in or the opportunity zone you're in, that's going to equate to $4,000 per new job for the next 5 years.
Right.
And so, yeah, any credit that someone might be interested in, a quick exploratory call can typically provide an estimate of what the max or what the range would look like.
Absolutely. No, yeah, you're exactly right. And I think a lot of this, you really don't know what you don't know. And, all of us kind of having past experience or experience in economic development, you look at those things like the opportunity zones and, like LDCTs and all of these other investments that people can take advantage of that you just don't know about. And so I think people are now starting to switch more remote, and they're trying to figure out kind of what that looks like. And, I know implementing software or doing any of that can be scary, but there is a way to offset that so that you can keep your employees. But yeah, so other than that, I'm trying to, we kind of have a few more questions kind of rolling in. A lot of them are a lot of the same. But let's see. So one of them, sorry, I'm trying to read through them. Let's see. Okay, here's one. So do other states have similar tax credits, or is each state different?
Kate, do you work predominantly in Georgia, or do you work in other states? I wonder if it'd be easier for you to answer that question.
Sure, I'll share my answer, and if you have anything to add. The answer is it's very different state to state. And I will say that Georgia is one of the most pro-business states out there in terms of credits and incentives. We are asked all the time, well, can my operation in South Carolina get the same credit? And often the answer is no. So the great news is Georgia offers a lot of incentives and credits to help you offset your tax burden. But other states do have similar credits. It might be that they require different amounts of information on the front end to pre-qualify you. Whereas in Georgia, you can go back and say, well, we implemented this 6 months ago and you can still get the credit. But South Carolina, for instance, has a great job credit as well. And we actually have started working on that one just because of the demand, and it's similar to the Georgia job credit. But again, it's really state by state, and we have connections at the other states' economic development groups. So if someone wants to know about a specific state and what's available, feel free to send me an email, and I'd be happy to help connect you.
Perfect.
Yeah, thank you, Kate. I do look at what other states do or have done just to have a general understanding of the competitors. But if nothing else, but it's, I'm paid to say Georgia's the best, so it's hard for me to.
Well, and you can't fight facts, right? I mean, number one state to do business. So.
So thank you, Kate. That's everything she said is consistent with my perceptions, or
Perfect.
Otherwise it was helpful to hear from you on that.
Definitely.
Well, and we've tried to find, because of course we've got lots of clients that operate in multiple states, and we've tried to help get them more money, and it just doesn't happen outside of Georgia the way it does in Georgia.
Yeah, that's a good perspective for me to hear, and I hope folks on the call too.
Mm-hmm. So let's say I am a company from the outside coming in, or let's say I'm a company who's already currently here in Georgia. What's the best way for me to get in touch with you guys if I'm not on this call? What's the best way, I guess, to, especially with the state, what's kind of the best way to navigate that in terms of who I need to get in touch with at the state of Georgia?
Yeah, if you're interested in connecting with the state and don't yet have that foot in the door, as a follow-up to this, I'm happy for you to start with me. We have a whole team of project managers that work with existing companies that are located throughout the state. So if you're an existing company looking to expand, like once you reach out to me, I'll help make sure you get connected to the regional manager for your region. And then for our statewide projects, we have a team based in Atlanta that works with companies that are new to the state, thinking of their first location here. And Brittany Holtzcall, she's our division director. And so I will connect you with her, and she'll make sure that you are connected with the best project manager for, we have industry, that has the industry expertise or other expertise that best aligns with your business.
Okay. And what about with you, Kate? What's the best way, because I know retraining tax credits, unless you don't know about it, what's kind of the best way to get that out there?
Yeah, I mean, I would just say reach out, like I mentioned earlier, just a 15 to 20 minute call would be able to either identify an opportunity or say, hey, there's really not a qualifying opportunity this year, but I can answer questions about what a company might invest in the future that would qualify.
Perfect.
And again, we do the job credit, the investment credit, everything Dana mentioned as well. So happy to share our thoughts on that and be a resource, provide an estimate of what we think a credit might look like. And then
Absolutely.
Whether you use us for the work or not, it doesn't really matter, but we're happy to field questions on those.
Great. Yeah. And with that, those are pretty much all the questions we have. And really, I guess, just kind of wrap it up, as Kate and Dana said, if you guys do have any questions, my contact information is on the screen right there. We will also, I've said this, I don't know, I think 3 times now, but we'll be recording it. And so we can share this with anybody. If you have any questions in terms of who to get in touch with, feel free to email me. I came from the economic development world, so I can kind of help guide on who to best communicate with. And yeah, so we'll share this, and then hopefully we can continue to do this down the road. But thank you both so much. We really appreciate it. We just want to shed some light on some things during some rough times where people can actually save some money and keep their employees. So that's obviously very important to us. But other than that, thank you both so much. And yeah, if you'll have any questions, feel free to reach out to Dana, Kate, or myself.
Thanks, everybody.
All right, guys, y'all have a good one.
Thanks,
All right,
Megan.
bye-bye.
Thanks, everyone.